What's up, guys? It's Trader X again. All right, so welcome to it. So today we're looking at two of the setups that I actually took, both on Aussie dollar as well as the USD CAD, right? Yeah, the trades concluded, so I'm gonna go through my thinking so you can better apply what I actually showed you in the previous three videos, right? And if this is the first time hearing this, or if this is new to you, or you just stumble across this channel, I highly suggest that you go back to the previous three videos that are titled How I Trade Forex. They will bring you up to speed to what it is that I'm talking about. And another thing is, I say things off the top of my head, guys, so pardon me if this is not your cup of tea. I fully understand, but that's just how I've been doing things, and a lot of people find it helpful, and so I carry on. All right, so before we go ahead, guys, I just want to give you all a quick plug. I'm sure you noticed that I changed brokers to XM Global now. Yeah, so the reason for my move to XM was really because they offer the lowest spreads on forex. I noticed that most of my trades would not get filled because of the exorbitant or the big spread that I used to have, but now I stand a better chance of my orders being actually executed and filled. Another thing that attracted me to XM is they also give new traders $30 to start your trading, right? So this is no strings attached whatsoever. I'm talking open a new account, verify it, and claim the $30. No need for a deposit whatsoever, right? But if you do make a deposit, right, maybe a deposit of $100 or above, this is a new promotion that I noticed on their website that puts you into the Go promo lucky draw that runs until the 30th of November 2021, right? To stand a chance of winning, get this, up to $7,200, $7,200 in cash just for trading your account and whatever it is that you have deposited at that particular time. So, but however though, guys, I need to just point out there is no requirement for you to claim that $30. You can just go follow the link. I'm going to leave the link in the description. Follow the link in the description, sign up, verify the account, and then claim the $30, and you can start trading right away. This is a start most traders I know would actually need, right? So if you are in need of a little bit of that capital to get you going, or you want to feel out how XM actually works, take advantage of the $30, right? But if you do deposit $100 or above, just know that you will be entered into the Go promo lucky draw. And look at their website. Go check out their website for more information on the Go promo lucky draw. And another thing, guys, one more one more quick plug is, if you're still looking for that quality education, I still strongly recommend that you go check out Price Action Ninja. This is where I learned a great deal of my education, right? I'll also leave a link in the description. Follow that, sign up, and get that quality education. All right, so let's get into it, guys. Without further ado, let's get into it. So we're looking at the Aussie dollar first, right? Now remember what I mentioned to you guys, that you need to follow a bigger time frame, because a bigger time frame reacts slower to your execution time frame. I execute at the hourly chart, sometimes at the 2, sometimes at the 30, right? Between those three, but predominantly at the hourly chart, right? And when you do catch that reversal, well, after the reversal happens and it's a pullback, you know that you're going to hold it for a particular period of time. And the same can be said with a continuation, right? And that's the reason why you want to follow your daily chart, because it gives you your main price structure. It gives you your main price action. Get it? All right, so again, if you don't know what we're talking about, previous three videos will help you out. All right, so this is what I thought when I looked at the Aussie dollar. Off the bat, I could just tell that price is bullish, right? It just, based on the daily chart, my bigger time frame, it just printed a higher high followed by a higher low, and we are currently in a higher low. Well, we just established a higher low, right? Not a higher low, a higher high, right? This was just before we found this high here, the high of this current higher high with the arrow moving, right? So off the bat, I knew that I'm going to be looking to sell this pullback here to a specific point, right? But we'll get to that. Now that I had that in mind, now that I have all of that in mind, remember what I'd mentioned to you guys. What the first thing that I want to know is, where is price going to potentially stop and attempt that reversal, or even not attempt but start that reversal, right? And I'd mentioned to you guys, the most important things that you want to look at as price continues higher is the previous week's high, not the previous week's, the previous month's high if you're looking at the daily, the previous swing high as well as an institutional level, right? Because we don't have any reference. Remember, what happens to the left has no bearing on any continuation move. You need to understand that. The only bearing that price has, right? Current price, that is, price has, is the previous month's high, the previous swing high, or an institutional level. Those are the only three things that you need to concern yourself with. Don't go back and look at what happened here and hope that price is going to stop. No, especially when after price has done this, especially when price has given you higher highs and higher lows. When it does this, this basically means whatever's to the left here is all trash, because it's starting to undo everything that has happened to the left. Does that make sense? You get it when you start to think about, when you start to kind of grasp the system, you'll start to see things start happen, really. Because I've started to notice a whole lot of things, and I'll show you one of those things that I've started to notice, which happened on the dollar, on the Aussie dollar, right? So like I was saying, the first thing that I did, I took note of, this would be my previous swing high, right? I took note of my previous swing high. My OCD compels me to do this, guys, so bear with me a little bit. So I'm going to copy that, paste it here. I need it to be straight. So there we go. So this is my previous swing high, right? And then from that, I want my previous month's high. So you can clearly tell that the previous month's high, in relation to current price, right? So current price was here, guys. Let me just, so that I don't confuse you. Current price was in this month here, just before this new month. Current price was here, right at this month here, below the arrow, right? In between these period separators here, right? So if you looked at your previous month's high, your previous month's high is the same as your previous swing high, right? So that's okay. But when I noticed price break the previous swing high as well as the previous month's high, the only thing that I knew that price is going to stop price, the only thing that I knew is going to stop price from advancing was an institutional level, right? And from that, I plotted some institutional levels beyond the swing high, right? But the one where price actually reversed that was 75.50. Let me just go ahead and do this. So 75.50. And all I had to do here, oh, I just moved it. And all I had to do here was just wait at my smaller time frame, 75.50. Let's do that. 75.50, click on OK. And all I had to do here again, guys, was just wait at my smaller time frame and wait for price to give me what I need to see, right? So going back to our smaller time frame. Now notice what happened here. Auto snap off. So price advanced to the high side, right? It broke the previous month's high. Now the previous month's high is right here. Let me make it way more thicker so y'all can see it. There's the previous month's high, the thickest line, broke the previous month's high, and as it was advancing, I was expecting price to either have, not either, but I was expecting price to have an interaction and then start to reverse from an institutional level. And as I mentioned, the institutional level is 75.50. Get it? 75.50. And as you can see, price went higher to the 75.50. Again, this goes back to our patterns. Price went high to the pattern, right? Attempted to break it, but it failed, right? Price failed, came down again, gave us, this is a higher low, right? Instead of printing another higher high, it failed. So this is a failed high. Remember, guys, this is a failed high pattern, right? Failed high or failed low pattern if you're looking at it in the opposite direction. And then price collapsed to the downside, taking our price structure here to the left. You all can see that with that green line, right? Let me make the green line slightly thicker as well. Then price broke price structure right here. Now when it broke price structure right here, that was my alert. That was price saying to me, now you need to be alert, and now you need to be looking for an area where you're going to enter. Now the first thing that popped up to me was this move over here. Now let me make it slightly smaller. This move over here is the one that broke price structure, right? The one that broke price structure, this move here. This move is the one that broke price structure. Let me make it slightly thicker. This is the move that broke price structure, and that's what I want to see. So when I saw this move happen, right, I knew that I needed to find the origin of that move, and the origin of that move is right here. So there goes my supply level, And all I had to do was just wait for price to come back in here, pick up my order, and then go collapse. And that's exactly what I did, right? That's exactly what I did. So I waited for price to make an interaction, have an interaction with that 75.50, because I knew based on, hang on, let me delete these. I knew based on the daily chart that we are going to be seeing a reversal happen, which would be a pullback at the bigger time frame, right? Fantastic. So I was in, I was happy, all is good, I was fine. Now again, if you use fibs, the same anchor point, the origin of the move that breaks price structure from that last important level, which is this one here with the green line, right? You could have anchored your fib from there all the way to down here. All three of the orders would have been filled, right? And if you were looking at that order block or that supply zone as well, that would have been 4 trades all in one go. Now let me do this. I'm just going to make this blue. Let me fill it. There we go. If you trade fibs, this is where all 3 of your trades would have been triggered. All 3 triggered right here. Price collapse to the downside, right? Fantastic. Now let me just remove most of the things here. Now in terms of target, again, I went to my daily chart, right? And I took a look. So this one was, I was too premature to get out of it, and I'll explain why. But I took a look at my daily chart, and what I want to do here is, remember guys, this is a continuation here, and now we just established the pullback reversal, so meaning a pullback is underway. What's the one thing that's going to stop price from advancing to the downside? We're looking at I mean in the event of a pullback rather, that would be your order blocks, your fair value gaps. What else is there? Sorry guys, let me see. There we go. It would be your breaker block, your fair value gap, or your order blocks, right? When a pullback happens, right? So what I did was, it was premature of me. Like I said, I'll explain. What I did was I identified potential areas where price could possibly reverse. This is the first one. The second one is down here. And then I've got the third one right down here. Right? And I've got the third one right down here. In theory, this trade, I shouldn't have let it go. But let me show you what happened here. I should have still been holding this particular trade. But I entered right here. Where is my... I entered right here. Perfect entry. This was one of the most beautiful trade entries, and this is what I mean by sometimes my trades would not get filled because of spread, right? Trades such as these ones, you'll notice as you get consistent with this particular system that, you know, sometimes it goes to a pip, right? It picks up your order to a pip and you'd suffer no drawdown whatsoever, or even a pip drawdown, and then it'll go down. But you know, with my previous broker, I would miss trades like these, and now with XM I'm able to execute or get filled, right? So I got filled right up there, and I took my profit right at the edge of this box here, right? Or this order block or demand zone based on the daily chart, right? Now why am I saying this was premature? The reason I'm saying this was premature is, like I said, these are things that you're going to notice as, you know, you get a little more acquainted with the system itself. This particular demand zone here, is a weak demand zone, right? Why I'm saying this is because it's too close to the reversal point of price itself, right? So chances are a lot of sales is coming into the markets right now to absorb all of these buys here, right? To absorb all of these buys here. So chances are price is most likely going to blow past this one, and we're most likely going to blow past the second one as well. But this one here is where we're going to see possibly a reversal start to happen. We're going to see possibly a reversal happen at this one down here, right? The reason for that is because, think about it logically, guys. We learned this when we begin trading, right? When a trend happens, as it happens or just as it reverses, that's the strongest part. You know this, we've heard this all the time, right? But remember how many times you've heard the fact that the longer a trend continues, the more weaker it gets right close to the end of that particular trend, right? So that's the logic that I'm talking about right here, right? So we can assume that this here, the first demand zone here, is going to be weak. The second one might hold up, but we don't know. It could actually repel price a bit. So we could see some of this action start to happen a bit before price continues on down again to have an interaction with this one and then possibly blow up, right? But this first one here, to me, in hindsight, yeah, I know I'm saying this in hindsight, is actually a weak one. It's in hindsight because I've already taken my profit and I'm beating myself up over it. But anyway, stuff happens, right? I'll just have to wait for reversal to happen. Now, to show you why I say this is most likely going to be um a weak zone, is remember what I mentioned to you guys. When price gets into a zone, you want to see a pattern happen. Look what happened here. Price went in, gave us a swing low, higher low, right? And then gave us, no, I mean a lower high, and then gave us a lower low, followed by a higher high. So in theory, because we are in this demand zone, price should have respected this demand zone here, right? So in theory, price should have respected this demand zone here. But look what happened. It went higher, came back in, well, went higher for like an hour or so, and then came back down to annihilate the low here. You see that? Right now, it's beyond this previous low. So this suggests that this pattern here is not going to work here. And it suggests that this particular zone here is not going to work whatsoever, right? Chances are we're going to see it break beyond this zone here and head for the second one or even the third one, right? Great. Now let's get into the CAD. The CAD was actually a fantastic one. The CAD, let me show you. It was aided by the news. So again, with the CAD, I looked at price structure. You can clearly see price here went down, right? Went higher again. Let's see, went higher again. But I was more interested in what happened here. So from here to down here, that's a lower low. It's undeniable. Lower low, taking out every, you know, taking out everything here to the left. Well, not everything entirely, but taking out liquidity here to the left. So this particular move told me that price is bearish, right? Price is bearish. And if I had looked at, you know, yeah, well, it told me that price is bearish, and this is a continuation move. This move here is a continuation move. Again, the same thing applies. I look at the previous month's low, which is right here, which got broken, right? Previous month's low got broken. Previous swing is right up here, which also got broken. Now, once price gets beyond these two, again, what is it that we look for? An institutional level. An institutional level here for me was it 2300? I'm not too sure. I think it was 2300. Let me see. I can't be bothered with typing, guys. Okay, so it was 2300, and all I had to do was just wait for price to get down here in order for me to be able to catch a reversal, right? Now let me remove these two here, delete all selected. Now all I had to do again was just wait for price to make its way to the 2300 level and witness a reversal happen. Wait for my pattern to happen at the hourly chart. Lo and behold, same thing happened, right? So we can clearly see here what happened. Price fell from up here to down here, right? Nice move to the downside, and then out of the blue we get a move to the high side. Bam, taking our price structure here. Okay, I think I should have drawn that better. So price did that, and then it did this, and then it fell, and then out of the blue we got this big move to the high side, right? Yeah, so you get the idea. Let me blow it up a bit. So that's what happened. Price came down, pulled back a little, giving us another lower high, and then followed by another lower low, making contact with the 2300. And from then on in, we saw a big move go to the high side, breaking price structure to the left right up here. Breaking price structure right up there. Price comes down, and then it shoots all the way high. When it shot all the way higher like that, and it shot all the way higher. Now this is another setup that you're going to quickly notice that it happens most of the time, right? Where price just goes higher and it never comes back for the previous or the origin of, the reversal itself. A price just moves so quickly up out of that particular level that it never really comes back to this particular level here. What this normally tells me is that price will return at some point, right? And I normally just leave my pending orders right there. I normally just leave my pending order right there until price comes back to fill it. But what had happened here is another thing. What price actually showed me was as it continued higher and it pulled back, I was expecting price to come down here to fill my order, but it didn't, right? And then it shot up higher again doing that. When this happened, it literally, quite literally, told me or communicated to me that there's manipulation actually happening here. There's manipulation happening here. We're going to most likely see higher highs and higher lows, as well as a trend line liquidity start to form, or a trend line start to form. This is where, remember, retail traders, a lot of retail traders hang out, right? Retail traders like to see this trend lines. So that's what happened here. I knew that this was most likely going to be the outcome, right? So that's what happened right there. Price came down, made a test, and then quickly moved out of there. And when it quickly moved out, it started printing higher highs and higher lows. Now this does not mean that you shouldn't have taken trades here, right? You can take trades right there, but just know, like I'm saying, when it bounces off, it could either be a previous swing high or low, previous month's high or low, in institutional level. When it bounces off quickly and hard, you should expect price to come back there, right? This is one thing that you also want to go look at when you backtest. Right? Just go back and take a look at these things happen. This is one of those setups, and it's one of the most lucrative setups that actually happens, right? Because it could go on for some time. Price could just bounce off the 2300 level or whichever level, and then just continue in the opposite direction for many days or even months, only for it to come back, pick up the liquidity right where it started, and then shoot all the way up. For another, it really doesn't matter, like a day or two, just cover all that ground. But yeah, don't take my word for it. Go back, take a look at it, and you will see what it is that I'm talking about. But anyway, so I knew that this was manipulation starting to happen, right? And I knew that, there will come a point where price is most likely going to come back down to pick up the liquidity that is down here before it starts before it makes its way. I was holding this trade for 6 days, right? I know, guys, I was holding this trade for 6 days. But anyway, so when this happened, I knew, like I said, I left my order right down here, right? Let me remove this demand zone here. I left my order right down here. And then there was a news event which forced price rapidly down to here. And look where it bounced. It bounced right at the 2300, picking up my order in the process, and then it started to move higher. Right? If you follow me on TikTok, you'll see that I do a lot of videos on TikTok because they're like 30 seconds, and I just take a video of my screen and I just put it on up there. But you will see this trade that I actually took if you do follow me on TikTok, or if you are going to follow me on TikTok. But you'll see that. But anyway, so that's what happened right there. Price came rapidly down. It came rushing down, picked up my order, and then it just started to slowly move up. Now you can only guess what happened here. The reason this move happened here so harsh was to take out the liquidity contained here. Remember what I said to you guys about the trend line liquidity, where a lot of retail traders like to look for. I used to be that guy as well, but I'm no longer that guy. But anyway, this is what a lot of retail traders actually want to see, right? And you can clearly see it's happening again here, right? So I wouldn't be surprised to see another huge move to the downside right here, right? To the downside right here. Now my target for this particular trade was actually right up here. So I took my profit right up here and I called it a day. I don't want to hold it any longer because, looking at the daily, let me remove everything here. I don't want to hold it any longer because looking at the daily, the market is actually ranging. It's not something that I would like to see because I know my bias is to the high side, but it's not something that I particularly like to see. When I do see a reversal happen, like it did after making contact here, I want to see it just move higher. You know what I mean? Just continue on higher. What could possibly happen here is we could see an accumulation area start to happen here. You know, support and resistance traders get taken out, bounced around. You know, so I don't want to be a part of that. I know my bias is to the high side. And I'm expecting price to move down from here again because you can clearly see what happened here. We've got a price structure break here, and if you look at the daily again, if you look at the daily to the left here, we've got a supply zone right here, and that's made contact with the supply zone. So if you go to the hourly chart, that explains why this move actually happened here. See that? From here to the downside, this came back up again, right? To this zone here, and now it could possibly be on its way to the downside again, right? So like I said, because of, you know, because of support and resistance, we're most likely going to see a lot of traders, or most likely going to see price, you know, go up and down here to shake out a lot of traders before it starts to go higher. Now you might be asking yourself, why am I not selling this? The reason I'm not selling this is because I'm only interested in buying here. I'm interested in the bigger picture. The bigger picture suggests that price is most likely going to move higher as a pullback before it continues down. So I do not want to trade against you know, the overall bias of the markets themselves, right? Or the overall bias of the daily chart. So that's what it is. All right. So that's it, guys. That's all that I actually wanted to discuss with you guys, show you, go through in order for you to be able to understand this here particular system. I hope you've learned something. And again, guys, remember to take a look at the links in the description and take advantage of the $30 from XM, because I know a lot of you guys could use that little bit of a bump. Anyway, guys, that's it. It's Trader X. It's been good. I'm out.